Hi everyone, I'm Sonali Basak. I'm the insurance reporter at Bloomberg News. I'm here to talk about the future of the property casualty industry with you today with James Hobson, who recently became CEO of Attune, which provides all sorts of data solutions for the small and medium-sized business market for insurance. Then we have Tom Hutton, a managing partner at XL Innovate. He also had worked with a number of startups throughout his career and also now is on the board of different startups, including, I guess, can you even call them a startup anymore? They're so big, SoFi. This is Beth Maerz, who has been at Travelers for about a decade, and she runs customer experience and innovation. What I'd really like to start off with is, the property casualty industry in the US has been through a series of challenges, right? I mean, 40% net income for the industry has been 40% lower in the first quarter of this year. That means $7.7 billion in net income throughout the entire industry. So I want to focus on how data can solve some of these challenges. But before we even do that, we have to define what insurtech means to you guys, especially given your work with the larger carriers that you have spent so much time with. Beth, do you want to talk to us about how you define it in your role?
How we define insurtech overall? I mean, I think for us, at least the way we look at it within the carrier space is how can we use technology across the life cycle, across the spectrum of what we do to drive change. So when we're looking at insurtech companies inside the carrier side, we're looking at how do we rethink underwriting? How can we get information at the point of sale more rapidly to understand who the risk is, to be able to underwrite them better, to be able to do it quickly? We were just talking earlier about the fact of how do we get rid of the notion of post-issuance underwriting, right? How do we have the data and analytics when we have the client on hand? We can sell them in one shot. But I think the other side of it, and much what we've heard for the last couple of days, is also new companies that are coming in and taking market space from us where we've left the customer experience gapped, right? So I think anywhere where we've left a break point in the customer experience or where we've left the customer unhappy in that experience, there's opportunity for new companies to come in and redefine that relationship. And we're seeing that with companies like Lemonade, et cetera.
Tom, do you want to define it for us?
Sure. There are a lot of definitions, and they probably all work. We think of it really in two perspectives. One is the companies themselves, and the other is probably the mission or ecosystem of this movement that we have. And with respect to the companies, you have the two words, obviously, technology and insurance. There are companies that are providing technology-based solutions to insurance companies, whether they be distributors or underwriters or investors. And those companies, in our case, are companies like Cape Analytics that provide data or analytics to the likes of Beth and her company. We then have another group of companies in the sector as we see it, which are really providing insurance products or services enabled by, ideally, dramatically, competitively by technology. And those would be the Lemonades and the Slices of the world, or the M-Brokers of the world that are entering the business itself and providing a technology enhancement. The movement, on the other hand, is another way of looking at it. And the movement, I think, is one where we now have hundreds of insurance companies that are helping these ventures. We have I've never seen another industry that's received change the way the insurance industry has. We have entrepreneurs who have been attracted. I mean, people in this room, there are hundreds of people interested in this topic who had no interest in insurance 3 years ago. So that's very helpful for the insurance industry. That's part of insurtech, as far as I can tell. And then I am a little bit personal about this, but I think that the venture capital model has provided a momentum to these ventures that they don't have in the normal insurance environment, that sort of compresses the time down, provides the practice of bringing in people from the outside world, brings technologists into the play. And together, the investors, the incumbents, the entrepreneurs, and enabling technology are the movement of insurtech.
James, you started your role but months ago. How are you defining insurtech?
I'm trying to figure out what insurance is, and then that's the big unknown for me now. So I think I agree largely with everything that was said. I think that when you think about how technology can be applied, and I spent time in fintech. Ultimately, fintech took on a life of its own, where people would talk about financial technology or the technology, but lose sight of what is a problem you're trying to solve? Why do you think you can do something better than the way it was done? And so I think that, you know, the way that I look at it as an entrepreneur, somebody who is trying to build a company, we have a very specific problem that we think that we can solve, and that we think that we can do better by leveraging new data, new technology. And that's fundamentally, how can we dramatically simplify the process for a small business to get insurance? It takes a lot of time of the small business owner, of the broker who has to fill out the questions that's needed, and then it goes through a manual underwriting process, and then it can be re-underwritten even after the policy's bound. And so what we're doing is we're building a platform that would do all of that in real time with new data, so you can dramatically simplify. And then if you can simplify it, then you can think about, okay, how can we actually improve that customer experience and make it better? But I think it really touches all parts of the value chain. I think insurance in many ways is more complicated than lending, where I came from. So while there's some similarities, I think there's also a lot of differences. But I think you really, if you're thinking about how to apply technology, you should be thinking about, how do I make a customer's life better? And if you can put the two together, you can be really successful. But I think sometimes that can, you know, as these things gain momentum, it can kind of get lost sight of that you're trying to do something better.
It's interesting because you're starting from the ground up. And Beth, you've been at Travelers, one of the largest property casualty companies in America. You mentioned earlier competition, right? We've seen more than $7 billion since 2012 flow into this insurtech space. Wondering from your perspective, are the things that the newer incumbents are doing that are just nimbler and maybe better than you've seen coming from the bigger carriers?
Well, I mean, I think in the last 2 days, if you haven't heard that what the new players are doing is finding breakpoints in our model from a customer experience perspective and filling that, then we missed something in the conversation. I mean, I think that is what they're doing really well. They're starting, and you just heard it as well with Attune, they're starting with the customer experience in mind first, and then they're pulling through how do we make product and how do we build services around that to take advantage of, quite frankly, areas of opportunity that the incumbents have left on the table. You know, I think there's that side of it. I also think there is real pain points in legacy systems that many of the incumbent carriers hold. And also we have a challenge in attracting talent. We're based in Hartford. For those of you in the data mining space that know how hard it is in machine learning to get talent, let me tell you how hard it is to attract somebody in machine learning to Hartford, Connecticut to work for an insurer. So I think we have that challenge as well, is how do we retool internally the talent we need for today's product as opposed to the talent we had for yesterday's product. So I think those would be some of the big areas where I'd see challenges.
I want to hear, yeah.
So I have a fairly strong view that incumbents survive. I don't think that we're going to see many insurtech companies as publicly held versions of the Travelers. Most of them will become part of the Travelers in the Hartford and XL Catlin, et cetera. And the good news is I don't think that the 6th and 7th best in a sector are likely to go away. I think they get absorbed by the 6th or 7th insurance company as opposed to not being funded in the future. So that's great news for the entrepreneurs. But I think what does happen is that, as Beth just said, customer experience is an obvious example of an area where the insurance industry has fallen behind for a long time. Well, it's also fallen behind with respect to what solutions it's providing to risks, which we call products in the industry. It's fallen behind with respect to the fact that it's become a very expensive industry to operate. I think Daniel Schreiber said 30% in personal lines. I think that the result of insurtech will be a better customer experience, a better set of products, a lower cost of operations, and probably a better way to capitalize the industry. And that cost of operations inevitably means less people.
So insurance is a very capital-intensive industry. Interestingly, you're on the board of Lemonade.
Right.
And, you know, we had Lemonade and Metro Mile yesterday on a panel, and I'm wondering from your from what you expect, do you see more carriers entering the industry, or do you see more services companies?
Probably more services companies, because the world doesn't need too many carriers. I happen to like managing general agent models for ventures, even though Lemonade is not one. They're not one for a very good reason. Their philosophy of customer experience requires them to be in the chain all the way along. Managing general agencies are very effective at utilizing the capital at the Travelers in a new distribution arena, and everybody wins. So probably more service than carriers, although there will be more carriers. And ideally, they get created around new solutions and new risks so that the industry grows as opposed to just becoming more competitive.
James, as you guys start from the ground up, how are you thinking about structure and what areas in the market you guys want to disrupt?
Yeah, well, I think it's very interesting, and I agree because, the insurance game is a game of scale, right? So it's very hard to compete, I think, if you are subscale, and that primarily has to do with funding and being able to actually, provide coverage for claims. And so I think our model is a little bit different as a startup, which is we have 3 investors who are strategic investors instead of financial investors in AIG, Hamilton Insurance, and then Two Sigma. And so, but we're not, we came together because ultimately the full stack has to exist, right? And so I think sometimes, you're going to have startups who are targeting a specific part of what needs to happen to provide insurance to a customer. And ultimately, I agree that you'll see a lot of those get consolidated because there's so much advantage in the stack being integrated, if you will. For what we're trying to do, we are integrating where we have carriers on the back end in AIG and Hamilton who fundamentally believe that insurance can be underwritten more efficiently and better using data and analytics. And so I think it gets to the underlying cost. I think in small commercial, from what I know, and I'm not an expert yet, they would love 30% as sort of the cost. I think it's actually higher. And so there's a lot of opportunity that can be created there. But ultimately, if you still want to make the experience better and you want to innovate, you can't innovate without taking risk. And so what I think is interesting about our model is because we have partners who understand that they want to not just create efficiency by automating the way it's done today, but they want to do it better, they're going to be willing to take some of that risk. And the risk exists. You can't actually try to get the benefit without taking the risk. So I think that our model is really interesting. And then, that what Two Sigma brings from a data and analytics perspective as a partner is, if you're going to take that risk, you really want to understand, I believe, 2 things, which is fundamentally what risk are you taking, but also what's the volatility of that risk. And so I think that we're building a platform, we're bringing in data that helps us understand that, and obviously having someone like Two Sigma as a partner, given their history and what they've been able to do in automated investing, is incredibly valuable.
Can you see yourself working with more partners in the future?
Yeah, I think you'll see us work with additional carriers as we continue to add products. I think that we have a tremendous advantage in terms of, we get the ability to kind of do that first innovation with some partners, and then we can branch out.
So before this discussion, we had a big, we were thinking a lot about how the large insurance carriers have the opportunity to partner with the new rising companies. Tom, can you explain a little more about how XL thinks about how innovate should invest and work?
Sure, everybody likes to think themselves as special. I think we think we're special too. We are a venture capital firm that can never be as well known as Sequoia Capital or Kleiner Perkins or somebody who's been around for a long period of time. So we focus on those things where we can be special. And XL has the belief that it will be better off with change in the industry, not worse off. It's got the courage that it can withstand change and lead change. And so they've provided us capital to help change the business, not to follow their strategic needs, but to help change the business. And we have proceeded to address companies, and obviously we have to earn the opportunity to be involved with a venture like Lemonade. But we focus on businesses where we can actually be special, make a difference, either through our knowledge or through XL Catlin's capabilities and relationships. And through that, we've actually come to so appreciate the power of what those relationships can provide that we look around elsewhere in the industry and we want to take our venture and go meet Beth because we say travelers could do unbelievable things to help Cape, for example, and hopefully we're there doing that. So we do see a partnership between incumbents and startups in this sector that is, as I said, somewhat unique in that the incumbents are so willing, and in a fashion, the way James and I went through lending, in early days, the direct lenders thought of themselves as competing with banks. They are, in fact, partners of banks. Banks buy the loans. So in the end of the day, both things, it's happened in both sectors.
Beth, from your perspective, what are some of the more fruitful opportunities you've seen for travelers to partner with different companies entering the industry, and what have you been able to accomplish through your work there?
Yeah, and kind of building off what was just said there, I represent the other side of it, so I'm not on the venture side. I'm the person in the business trying to bring these capabilities into travelers and trying to leverage those capabilities. And I think it goes back to, again, there's opportunity across the spectrum, certainly as it relates to the underwriting process and the way we do business and use data and analytics today. And I think a company like Cape, which we are having conversations with, does something I think we talked about earlier, yesterday or today, which is they're bringing us data and analytics and a process around that where we can actually absorb a product into our process. So it's not just the analytics and the data mining, but also how do we take that and use it in our business process. I think there's huge opportunity there. I think we're doing a lot of work on the claim side because there's all kinds of opportunity to improve both the experience on the claim side as well as the speed around claim. So how do we think about real-time video interactions when we're taking a claim? How do we use imagery in order to take data from that claim and process it straight through so we don't have to have a claim handler look at it? How do we make payout in real time rather than make you wait 8, 10, 15 days to see that check? So there's opportunities through the full spectrum, and I think that as we've been looking at insurtech companies and startups, there are good solutions across the full spectrum, and I think Tom's right. I think there's opportunity to make the industry work better and give us an opportunity to deliver better products to our customers.
So another interesting thing is both Tom and James have a background in the peer-to-peer lending industry. Tom is on the board of SoFi, and James came to Attune from OnDeck. Wondering, what have you taken in terms of knowledge and insights from the P2P industry that you've been able to take to InsurTech to kind of help this industry as well?
I'll go first?
Sure. So I think for me, there was a few things as I started thinking about small business insurance and small business lending. I think first and foremost, I feel very proud and lucky to be part of OnDeck. And one of the things that I enjoyed most was just small business owners. They're awesome. I love talking to them, getting to know them. They're passionate, they're energetic, and they really are the backbone of the economy. So I think I was really drawn to that. Then I think if you look at what was needed to really transform lending at a fundamental platform level, it's a risk business, and insurance is ultimately a risk business. So I think there's a lot of corollaries in the type of data that we'll be able to bring in, the way that you need to build a platform, the way that you have to service the full stack. And I was encouraged by the fact that OnDeck, we had to build the full stack ourselves. Because 10 years ago or 11 years ago when OnDeck was started, there were simply no places you could get some of the things that we thought were fundamentally needed to make a better product. And I think in insurance, we have the ability to focus more on some core things. And so I was really drawn to that. And I think that the other corollary for small business specifically will be they tend to not get products that are designed around a small business's need. They tend to, if we're being honest, get either watered down commercial products or they tend to get trumped up consumer products. And so it's like, I don't have young kids anymore, but it's a little bit, like the square and the circle and you got to put them in the thing, and they just try to mash it through. So I think what I'm excited about for insurance like lending is if you can build a purposeful product for them and you can really understand their needs, you can serve them. You can serve them exceptionally well, and they'll love you for it. But it's a really hard problem, and so I like taking on hard problems. If we can build what I believe we can, and we have we have a product in the market today, so we've built it, but we have to add products. We have to continue to make it better. There's a high degree of difficulty, and so that means if you can do it, I think that there's real value. And then the question is, where does that what's the ultimate end spot for it? Is it standalone? Is it something where you see the integration happen 5 years down the road? But I think you'll see it play out very similar. And I very much agree with what Tom said, that ultimately fintech and the new lenders we've always been partners with banks because that's where the capital came from, but you're actually seeing those partnerships deepen. And I think you'll see those partnerships continue to deepen in lending. I think you'll see them happen faster in insurance.
Mm-hmm. Tom, what about from your perspective?
So there was a comment yesterday that InsurTech is overheated. There were probably more insurance-related ventures formed in the bubble of 2000 than there have been in the last year, by the way. They were all doing the same thing. They were all selling auto and life insurance policies online. There were hundreds, by the way. There were 300 ventures formed to provide, I think, construction material purchases. So it was quite a time in America. But the lessons, I think, there have been a couple of waves of insurance technology, one of which was catastrophe modeling in the 90s, one of which was the bubble, and I think now. And this one, there's a lot that's come into alignment, including the industry's willingness to support, including, by the way, enabling technologies which have become radically more powerful than they were a couple of years ago. But I actually think that the lending experience has helped as well, because it's convinced the investors that financial services is an area that they can have an impact in. And entrepreneurs have been convinced that they can enter a sector like James, where they didn't necessarily come from insurance and can have a big impact. I think the first few ventures I spoke with 4 or 5 years ago all wanted to be the lending club or SoFi or OnDeck of insurance. So they had that in their example. I think the last point I want to make, though, is that another similarity is that as banks consolidated into money center banks, they lost their ability to be efficient in making consumer and small business loans. If they ever had that capability in small business, they surely did in consumer. And similarly, insurance companies have kind of taken their eye off the ball of the customer experience of that small business, for example, where the industry today doesn't even serve that customer profitably. Brokers don't make money providing 3-person companies insurance policies. It's not worth driving out to see them, but they still need it. So it takes the Jameses of the world to solve that issue, and the industry will benefit.
I'm so glad the both of you spent so much time on small businesses, too. Travelers just made an acquisition in the UK, Simply Business. And I'm wondering, we've heard a lot about the challenges of small business. When Attune launched, it said it was an $80 billion opportunity. What are some of the opportunities in small business that we're seeing from Travelers?
So I'm personal insurance, but I can speak a little bit to it. I mean, I think and I think you had the quote up there yesterday. Travelers has been very clear around why we thought Simply Business was a good purchase for us, which is we could try to build the entire stack ourselves, right? We could try to look at that experience and try to build the technology and build the experience. Or we could look for an opportunity to enter into a direct channel with a small business that we thought fit our business model and fit how we wanted to go to market with another distribution channel, and Simply Business represented that. I think, for some of the things Tom was just saying, there is an opportunity in the small business market to reach people in a way that the brokers today perhaps can't profitably. So how do we make sure that we have both the channel and the product to do that? And I think also the leadership team of Simply Business clearly had alignment with where we were trying to go, and I think that we feel like there's really a team there that can help us build out our business, not only in small business, but potentially in other areas as well.
Before we had this panel also, all 3 of you actually had the question of, and you kind of alluded to it earlier, is the insurtech market overheated? We've seen so much activity over even just the last 2 years. Do you guys think that this phenomenon has room to run?
So I think it can run for decades. My wife is a med tech investor, and she's been doing it for 25 years, and there have probably been 3 times in 25 years when the stars have aligned, and the regulatory bodies are in alignment, and the investors and the technology and the market need. And similarly in insurance, there have been opportunities in insurance for as long as I've been around it. There are times when it is particularly appealing to invest in new things. On the other hand, there are times when companies that are already in business recognize those because they're in business. So I think that we will see cycles of frenzy when activity is greater than other times. I think there will be interesting companies formed every year. And there may be less next year than there were last year, but there'll be interesting companies every year. We'd like to be involved with them.
Yeah, I would take that from another angle as well. We've had a lot of conversations around improving the process, improving the customer experience. We haven't talked a lot about the fact that there's going to be considerable change in insurance just because the underlying assets we insure, particularly in personal insurance, are just changing. changing the way people use them. If we look at changes in mobility, and the auto insurance market has to change. We were talking about it earlier. We've built products for people to buy when they own the asset and they're never going to share that asset, right? So we've had a lot of conversations around the extension of buying a home and people waiting longer, but not only once they buy it, they want to monetize it. So they want to share it with other people. So there's opportunity for us in this marketplace to continue to change, not just because technology can bring it to us, but because the underlying products that we insure are demanding that we offer new solutions to those customers. So I think there is a tremendous amount of opportunity to continue to look at how do we bring technology and change to new products.
How about you, James, from a fresh perspective into the industry?
Well, I joined 90 days ago, so I hope it has some legs. Otherwise, it was a really bad decision. So I'm going to go with it has legs. But I do think that I would say probably one of the more surprising things, honestly, for me over these past 3 months, and one of the things that I really wasn't expecting was really the level of, I think, embracement by, or that's probably not the right word to say, but how the incumbents are embracing the change that's going on. I think that it's the first thing you have to sort of collectively say is we want to do better. And I think when you look at the number of ways from start to finish in what needs to happen from, and in small business specifically, a small business owner sort of understanding that they need insurance. And that's a really important thing. I'm a believer that hopefully we can make it less about need and more that they want, and they understand the value of it and why it's really important. But from what today is need all the way through getting them, there's so many steps where I think that there's a general acknowledgement and understanding we can do better. So I think that creates a tremendous amount of opportunity, and I think that where I personally believe fintech, especially in online lending, did get overheated, and it's because most people entering the space had somewhat of a Me Too model. They would start with, we're going to build the next X, Y, or Z. They didn't start with, we see a problem that we can address and we think that we can do it better for these 3 reasons. And so that to me is where you're sort of out of original ideas, and therefore what you need to do is, it doesn't mean that it's played out. I think that there's going to be tremendous innovation, by the way, still in lending coming, but it means that you need to take a step back and you kind of have to reevaluate because that phase has been a little bit played out. So I think there's a lot of entrants. I think that there's going to be, depending upon where you sit in that value chain, different struggles that you have and different challenges you have to take on today. Some of those may take longer than people think, but that just means that there'll have to be a little bit of an iterative process. But I think you're going to see some really interesting things.
Yeah, in any given sector of insurance, there are many providers, many brokers, many providers. So there may be many ventures serving those. There's not going to be one provider of a particular technology that serves the entire industry or a particular solution. There will be multiple successful ones. And I think while we may not need more automobile rate comparison businesses online for a while, there will be more, but right now, until the model changes, we probably don't need more. There are a plethora, or a large number of functions within insurance companies that are complicated, that make up that 30 or 40% cost structure, which if you're going to get it down to 20, require a multitude of approaches. And I think that continues to go on as people understand the issue, as entrepreneurs get attracted, as companies embrace them.
Tom, especially coming from the perspective of venture capital, when do you think we'll start seeing more exits from these companies?
So we are pretty darned early in this current wave. I mean, we're arguably 3 or 4 years in, and we've seen a couple of interesting exits. Travelers just purchased a company. Risk Match was sold not too long ago. And yet, so I was involved in the founding of RMS in 1990, which is, I guess Beth reminded me, probably the original insure tech business that was venture capital backed. And I was told it was going to take me a lot longer, or our team a lot longer, than it took a typical technology business in the Valley. And it did, by the way. It took 10 or 15 years before it was a great business. It's a great business today, 30 years after it was founded. And I could see a number of insurance tech companies probably taking 10 years to be mature, as opposed to 5 or 6.
So 7 more years until some IPOs.
That's fine. That's fine.
Well, thank you guys so much for taking time with us today. It was really nice to hear what you guys are thinking in terms of innovation in the industry. I can be reachable outside too, and hope to talk to you all soon.
Thank you.
Thanks.